Hello students, I am Dr. R. Krishnaveni, Assistant Professor, Department of Commerce Bank Management, St.Joseph's College of Arts and Science, Autonomous Cuddalore. In this video, we are learning about double entry system, types of accounts and accounting rules. The learning objectives are to know about the types of accounts and to learn about the accounting rules. The double entry system was invented by an Italian named Luca Pacioli in 1494 AD, and it has spread all over the world, becoming as popular as Arabic numerals. According to this system, every transaction has two aspects. One is benefit receiving aspect or incoming aspect, and the other one is benefit giving aspect or outgoing aspect. Benefit receiving aspect is called debit and benefit giving aspect is called credit. For every transaction, one account is to be debited and another account is to be credited in order to have a complete record of transaction. Therefore, every transaction affects two accounts in opposite direction. For example, if furniture is purchased for cash, it is a monetary transaction. Furniture is benefit receiving aspect, so it is debited. Cash is benefit giving aspect, so it is credit. Therefore, the basic principle under this system is that for every credit, there must be a corresponding and equal credit, and for every credit, there must be a corresponding and equal debit. Meaning of debit. Debit is derived from the Latin word debitium, which means due for that. In short, the benefit receiving aspect of a transaction is known as debit. The word credit is derived from the Latin word credit, which means due to that. The benefit giving aspect of a transaction is known as credit. The abbreviations DR for debit and CR denotes credit. By convention, the left hand side of an account is termed as debit side and right hand side of an account is termed as credit side. Types of account. Practically, every business deals with other persons, firms and companies, possess assets like cash, stock, building, furnitures, etc., and receives income such as commission, interest, etc. It is necessary to maintain the following to record all the above dealings. An account of each person, firm, or company with which the business deals. An account of each type of asset which a business owns. It comes under the class of real accounts. An account for each expense and gain. The accounts under this class are known as nominal or fictitious accounts. An account is a statement in the ledger which records the transactions relevant to the person, asset, expense, or profit named in the heading. So, the accounts can be divided into two headings, that is personal accounts and impersonal accounts. Impersonal accounts can be further divided into real accounts and nominal accounts. So, now there are three kinds of accounts maintained by the business: personal accounts, real accounts and nominal accounts. First, personal accounts. Accounts of a persons with whom the business has dealings are known as personal account. Example, first one, natural persons, the name of an individual, customers or suppliers. Both male and females are included in it. Priya's account, Anusha's account. Then second one, artificial persons or legal bodies. Firms account, limited companies account, educational institutions, bank account, cooperative societies account are known as artificial persons account. The next one, representative personal accounts. All accounts representing outstanding expenses and accrued or prepaid incomes are personal accounts. Example, prepaid insurance, outstanding wages, salary, rent, etc. When a person starts a business, he is called a proprietor. The proprietor is represented by capital account for all that he invests in business and by drawings account for all that which he withdraws from the business. So capital account and drawings account are also personal accounts. And the next one, real accounts. Accounts in which the business records the real things owned by it. That is, assets of the business are known as real accounts. Real accounts are of two types, tangible and intangible real accounts. Building, furniture, cash and machinery, etc. are examples of the tangible real accounts. So, intangible real accounts are trademark, goodwill, patents and copyright, etc. And the nominal accounts, it relates to the items which exist in name only. Expenses, incomes, etc. are there in business activities. Accounts which record expenses, losses, incomes and gains of the business are known as nominal accounts. Example, rent account, telephone charges account, interest received account, commission received account.